Welcome to Financial Literacy Made Easy program. In this program, we're going to learn about how to be wealthy, earn passive income through smart investments. Today's topic is about net worth. How do we calculate our net worth? So, what is net worth? So, let us see some examples today and we can calculate our own net worth. So, let us see. We see like we world's richest people in the world. So how do they uh, come to a conclusion? So as a person is the richest person of the year. So for instance, if you see Elon Musk, his net worth is $173.7 billion. Same with Elon Musk is the CEO of the Tesla and SpaceX. Um, and also with other Bill Gates, Bill Gates, he is also like co-founder of Microsoft. Jeff Bezos is also a rich man. He is a co-founder and a CEO of Amazon. So let us go through how we calculate the net worth, how we come to that conclusion. So anybody can calculate their own net worth, including the businesses as well as a personal. So we can today we're going to look at the personal financial statements. We already gone through the business financial statements, how to look at the business, how it's performing, what is the financial statements such as balance sheets, income statements, cash flow. Similarly, we can also we have to look at our own personal financial statements as well to know where we stand for this year. And also, it helps you to know how to improve your net worth, what you can do. You can plan accordingly for the next year. So, basically, personal financial statements records the information of the person about his income, expenses, assets and liabilities. If you have a business, how much you invested in the business and what's your drawings, all other things. Such statements can help individuals to measure how rich they are. So let us see the now what's the personal balance sheet consists of. For instance, if you like take up just put in Excel sheet, is a good homework for you to just look at, put your all assets and liabilities. On left side you put assets and the liabilities. And so what are the assets basically? Before we go and see what we're going to put it in example, so we just see what assets are. Assets are the mostly the you get the income from mostly from your real estate, or could be stocks, the rental, all this money, and some debtors. Like if you have lent to somebody some money, so that is also an asset for you. And the liabilities are loans, any taxes, bills you have to pay to creditors, like all the bills. So these are the liabilities. So basically we're going to list all your assets and liabilities in an Excel sheet. And there are three types of assets. Basically we divide into mostly like fixed assets. We already know, like a house, furniture, machines, all these are fixed assets, you can say. And the liquid assets are the like shares, cash in bank, cash in hand, all this, all the liquid assets which we can get instantly. And that's also like even a jewelry also, so this is also a liquid asset. And investments is the one you get returns from, that is like a real estate, as I said, stocks, bonds, equities. Those are the investments. So these all the three types of assets we have, so which is a generating income to you basically. And then we have to calculate our own income and expenses, which we have to put in practice. Everyone knows about it, but how many people, if we put in practice about income and expense, how are you going to track it? So usually income and expense has to put in track for every month or at least a quarter. So see how much you're earning, how much you're spending. That way you can avoid the unnecessary expenditure. So such as Like say you have a bills which are like recurring bills. Every time you get a electricity bill, that's recurring. Only thing you can see how you're going to cut down the bills, like and some expenses are like for entertainment, which you can control that as well, like up to how much you can control in that part as well, so like that. And then some are mandatory things like fuel or travel, going to work. There are some mandatory things which you can't avoid, but so we have to know about our expenses and see where we can save, and that saved money we can invest in somewhere else. So assets and liabilities, say, liabilities are which you owe, and the expenses which you paid. So these are difference between liability expense, which we already discussed. Like there's a thin line between liability and expense. So liabilities are the like which you owe to the people, like your credit card payment is in due. So any rates, tax which you have to pay like in next 1 month or 2 months later, that's a liability to you, a loan. Expenses are the ones which one you have already paid. Say credit card is a liability which for the next month is a due date to pay. Once you paid it, so it's a paid bill. That becomes an expense. So this is how was the difference between a liability and expense. Let us see a small example of a personal income statement. So if you get an income as salary, and then you get some any other income sources like shared stocks or could be rental, so that you consider, or through online eBay's online, here they take an example. So that's your revenue. And from that revenue, the expenses you spend on like food, rent, clothing, fuel, entertainment. So income, like minus expenses. So that gives income to you. So that is how you arrive with the net income. So it is very important. Make sure the net income is positive. So if it's negative, and then see where you can cut the cost. That's help. The personal income statements helps you to control your finances. And there are three types of cash flows we consider, like a cash inflow, cash outflow, and the net cash flow. How to calculate it? It's simple as that. Cash inflows are the one you get income, salaries, business, or if you sell enough your furniture or a laptop, a house, so we get capital gains from that. So this is the other source of lump sum income you get. And other incomes like rental income, income on shares, or passive income. And salary or business profits from business is a regular income. So these are the cash inflows. So cash outflows are the bills we pay, like rent, groceries, fees, loans, all the stuff, bills, and then cash inflow minus cash outflow means income minus expenses with a net cash flow, which already spent. Saw that. Now, analysis of cash flow statement is, if you are a positive, obviously you're in good position, and if you're a negative, it's not a good sign. And we have to check what we can do to improve our uh, cash flow, a net cash flow to positive. So let us prepare a personal balance sheet now. A personal balance sheet gives a snapshot of your wealth. So that's how it gives a net worth of a person. So for that, what we have to do is list out all your assets which you own. Assets is like a fixed, like mobile and immovable, assets, such as houses are fixed ones, but like stocks and all is immovable. It can be liquidated. And liabilities, you take the liabilities, which you have to pay the loans, and other bills, so they are the liabilities, and that assets minus liabilities gives you net worth. So let's see an example, how we look at. So your net worth difference assets, you own the liabilities and you have to pay. Yeah, this is we already discussed. So just calculate that in this balance sheet here. Assets minus liabilities. So typically, assets, we already said there are three types of assets. One is the cash flow, one is fixed. And so here we just had three. Where we go? three types like liquid assets, fixed assets, and investments. So the three types of assets we have seen. So let's divide our three types of assets here. So your liquid assets or like cash in hand or cash in bank, or these are like money who people who owns like the debtors, like your people owe you money. This all comes under the cash, so that's a liquid assets. And investment assets are the, like, you have invested in stocks, mutual funds. So those are the investments. So investments in the sense that say mutual funds are there. For instance, you have to take the amount which, if you withdraw today, it's only the worth of today only. So if you have put in a mutual fund for like say $100,000 for 20 years, but you have paid only like $10,000 so far, and your return of investment, if you withdraw that mutual fund like say $12,000, so you have to consider today's rate like $12,000. We can't put $100,000, right? So that is how we calculate our invested assets investments. So like stocks also, if you sell your shares, how much you're going to ask per today's rate. So we have to put those figures here. So we calculate all our investments, and then we calculate our personal assets, such as the house we live in, like the principal house. So we have to see how much is a bank loan, and then what's the sell price. That's give the equity. So if your house is about half a million, like $500,000 is the house if sale in the market, but the loan is around say $300,000 which you owe to the bank. So that $200,000 is equity. So this is how we calculate that $200,000 as a income from the primary residence. So if you sell all that, that's how you get the money. Same with the car. So if you might have bought a car for like $50,000 10 years ago, and if you sell the car today, its worth is only $10,000. So we have to put that $10,000 here. Similarly with any other jewelry. So if you sell it, you might have bought for like a gold for like $3,000 like 5 years ago, and it's worth like $6,000 today. So we put its today's value. So it's all current values we have to put for assets. So we got three types of assets we have to identify, categorize it, like a cash value, investments, and the assets, and total it up. So that's you total of your assets. Now go to the right hand side about the liabilities. So liabilities are the mortgage, how much mortgage you still owe on the house. Say you might have took the loan like 10 years, 15 years back, like $300,000, and you owe the bank today is 170K. So that is the mortgage value. And the loan left or loan, like what are the loan on the car, or could be credit card. We have to take the credit card the full credit limit. So if you have a card for $10,000, put the $10,000, because if you have like in $10,000, you might have paid $3,000 already, but still you owe $7,000. So take the $10,000 in consideration, like and then any loans, personal loans, put that all there, and that's all your liabilities. So now take the total liabilities minus assets, that gives you net worth. Here in this example, his net worth is only $3,000, which is a positive but is too low. And we have to think about it, what best we can do to improve our net worth. So that's the planning for the next year. So this we can calculate these personal financial statements every year. It's good for like health check. You have to check your financial statements every year. Alrighty, so we are at end of the session. So what the best assignment for you to do is prepare your own income and expenses of the month, and then like every month, and then calculate your net worth as well. Put your assets and liabilities. So use some online calculators from the bankers, and that way. And if you don't have the much house liabilities and all, like in a house or mortgage, use any of your family or friends. Yeah, prepare, or else you can take online any of the rich person's net worth. So I can show you how to look at the rich person's, uh, to look at the net worth. Like basically, it's go to the online, just type in net worth of Bill Gates, so it will show up you on Google, so yes, hope you have enjoyed the personal financial statements topic today. And yes, know your net worth and start investing, and improve your net worth as well, and start investments. You'll be like rich in very soon. So make a strategy of your own. Thank you very much for watching my video.